Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern Daylight Saving Time here in the U.S. Thanks for joining me for another Trader Bite and a new week. Happy Monday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market outlook looks mixed to risk averse this morning. Looks like money's being pulled out of equities, especially small caps. Small caps are down 17 points this morning. The Russell trading at 1337.7, followed by crude oil, which is down 53 points at 47.44. The leaders again are the safety instruments. We're looking at Euro FX being up 0.81% or 87 pips. Followed by gold, which is near its election day highs. It's election day highs here at 1258 and a half. Okay, so that's the overall picture. The overnight session shows the eurozone. Well, German IFO business climate came in strong at 112.3 versus 111.1. That's the key figure so far. Also, dollar's getting hit pretty good. The dollar keeps going lower and lower. It has lost 3%. The U.S. dollar has lost 3% since the beginning of 2017. It's hitting its 4-month low. Also, from it's at its low since the elections. As far as what we're expecting here, it is the beginning of the week, so we generally look at the entire week and where the releases are coming in. This morning, we really don't have anything on deck for the U.S. session as far as key data. However, we do have some speakers. We have at 12:45, we have Fed Speaker Evans, and again at 1:15 Eastern. Also at 1:15 Eastern, we get ECB Speaker Prait. And then after the close this evening at 6:30 p.m. Eastern Time, we have Fed Speaker Kaplan. For the rest of the week, though, tomorrow we have U.S. advanced goods, wholesale inventories, S&P Case Shiller, consumer confidence. We get ECB Speaker Makush and Visco, Feds George and Kaplan. Wednesday, we get the UK M4 money supply, and then in the US, we get pending home sales, Feds Evans, Rosengren, and Williams. And then the expectation is that the UK will invoke Article 50 on Wednesday. On Thursday, we get German CPI, US core PCE GDP annualized, Feds Mester and Kaplan. And then on Friday is the heavy day. We have UK GFK confidence, GDP index of services, current account in the UK, Germany unemployment, the Eurozone has CPI, the US has PCE, personal income, Chicago PMI, University of Michigan, and then also the G7, as well as ECB's Kerr and Fed's Kashkari. So looks to me like Wednesday and Friday are the heavy days this week. Let's move on to what we expected on Friday. Looks like there is a little bit of buffering going on. The connection is not clean again. Uh, I see that on my end as well. Here's what we expected on Friday. Friday, we were looking for a sideways open and a responsive up to the low volume node right up here. Right up here. That low volume node was at 50. At 52 quarter. 52 quarter is the low volume node. I didn't draw this right, but I was looking at 52 quarter on the LVN. Here's what I tweeted out on Friday afternoon. I cleaned it up a little bit. The LVN is right in here at 52 and a quarter, and it's basically made up of the low that was left behind Thursday, and then the high that was retested after the drop on Thursday. Those two at 52.50 and 52 give us an LVN at 52 and a quarter. And so and so it's that's what we're looking for. And then once the market rotated down, the key target was 2340, which is the high volume node. That's this black line right here. That is the most accepted price up above. And then beyond there, the extended target would be this point of control at 2332. So that's where we stand. That's where we stood on Friday's plan. The secondary plan is an immediate test of 2340, a bounce up to 2352, and then was looking for to finish in the range, take out the overnight high and finish in the range. That's not really what happened. Here's what happened on Friday. Again, the video is buffering. Unfortunately, my connection is not as clean as it should be. This is on my end, not YouTube's. So here's what happened on Friday. We had an open auction, a test of the 2052 and a quarter. We went through by 2 ticks. There's the LVN I was referring to, right in there. Okay, if I can draw it properly. So we went through by 2 ticks, almost a perfect test there, and then we rotate through the mid. That's the dark blue line. This line here is the mid. That's the high. That's the middle of the high and the low of the session. The market retests the opening swing high and it starts to fall off and it drops right into the point of control. The point of control is at 2331, 2332. We went through it by a tick at 2331. So again, 2331.75. So we get through by a tick at the bottom. We get through by 2 ticks at the top. We come all the way back to the open and we go sideways. The overall profile on Friday shows a pretty decent taper at the top, but overall the profile is pretty noisy. No consensus, no real uh, no real consensus on price just yet. It's better. It's a better profile than we had on Thursday, but Friday's profile is showing the bulk of trading happening in the middle, and those prices being somewhat accepted, but it is somewhat of a boxy profile. So that's what we got. The big picture, if I pull up my flex chart, the big picture is we dropped last week on the 21st uh, on that big volatile day. We dropped down, and then all we've done since then is we've gone sideways. So Tuesday we dropped, Wednesday, Thursday, Friday we've thoroughly tested the area. Again, 2340 remains key in this region. The market right now is trading 2322. It's trading down here. So it's working. What the S&P is doing is it's working its way through. If you look at the composite in this area, look how thin, how incredibly thin this all is, all the way down into January's high of 2293.50, which is the next key target below. So just remember, in the big picture, we are trading this really, really thin, poorly auctioned area. This is the area where we ran up, um, where we ran up and didn't never rotated. In general, we want to rotate back through and retest as we move up. That gives us an orderly auction, and it cleans up the process of testing prices as we push through. We didn't do that. We just push, and then now that leaves us with an LVN zone, and now we're testing that LVN zone by moving down. This is an area that has 2314. That gap mid right there, 2314 as the mid of the LVN zone. Again, that's the area I'd be looking out for as far as the initial when we get down there. Okay, so that's how things are looking. Again, the video is buffering. Unfortunately, I can't do anything about it. So let's make this real quick here. Let's look at the week, last week, what we ended up achieving. Very important to keep an eye on the big picture. We did take the week before last. We did start to one time frame up. So what we've done is we've pulled an impulse move up, pulled back, lower high, and now we're breaking lower. Classic reversal pattern. This last week gave us a lower high, lower low. This last week kicks off one time framing downwards. There's some significant resistance right up here between 2356 and 2360, especially. 2360 has got to be a line or a zone that's marked on your charts. And then the expectation on that is if we push up to it on the first try, I expect it to fail back into the MC point of control in the area, which is around 2345 at this time. So that's where we stand. The weekly is clearly showing that the market is could be done on the upside. So let's look at our plan here. Our plan for today. I'm going to leave these flex levels up. I usually remove them just to keep the chart clean. So there it is. We broke down on Tuesday. We traded sideways on Wednesday. On Thursday, we pushed higher, but we ended up selling off. That's the news on the. That's where the news of the Trump Care plan starting to fail, and a lot of news feed chatter on those days. And then on Friday, we ended up selling off, but then we bought. There was some pretty good buying on the close there, but we still failed to hold that, and we're trading down here at 23.22. So on the open today, I expect an open auction. I expect an attempt higher. Let's shift this up actually. So this morning, I expect an open auction. I expect a quick attempt higher. I expect that to fail, and I expect this to move down into the 23.14, push up, and then hold in the close in this 23.22 right where we opened this morning. That is the key plan for today. On the secondary, if we open and start to move down into the overnight low and can't get into this gap zone and start to take back the open, then I'm looking for a test at 23.31, and then again somewhere in the 26.25 area. That is hypo 2. Oops, that's hypo 2. Let's draw a 2 in there like that. And then hypo 3, we are opening out of range. We're opening out of range, so the probability of a higher time frame, or what we call the other time frame, or OTF, is participation is higher. So this is a day to watch out for an open test drive or an open drive. If prices here seem cheap for the market, and I don't see indications of that. If prices seem cheap, then we're looking for a test and then an impulse higher and then a push into the prior day's range. And if it does have any driving capability, then it's likely to get to 2340. That gives us about 18 points of range. And that would be the target for hypo 3. Okay. And then the final one I wanted to go over with you is if we do push higher and we're unable to find buyers, sustained buyers, expect sellers to step in, and I'm looking for an impulse down. And in that situation, I'm looking for 2309.75. This is an um, open test drive down, and that would be hypo 4. I don't usually cover 4 hypos, but we do have an open out of range in an area that is very thin on the profile, and we're likely to experience that. Sorry about all the buffering. I will repost this. I don't know what the story is with this feed, but it is what it is. Anyway, hopefully you find that useful. Remember, it's Monday, so make sure you have your plan for the week. Please don't go into the week just thinking, "Oh, I'll do the best that I can," and you don't have some way of what that is. By the end of the week, you should know what your statistics are, and the key statistics are percent win, percent loss, your average win, average loss value, either in dollars, points, or ticks. I prefer ticks. I don't like to think in dollars. And then with those figures, you get your expectancy, and that tells you where you stand. And then the next step is to go and look to increase that. What are the areas that need help? This is important wisdom here. Once you figure out once you figure out the expectancy that you have, it's really important to figure out what errors are causing it, because it's more likely to be driven by errors than your ability to read the markets. Okay, it's errors that, in my experience, eat your lunch. Good luck, and I'll talk to you soon. Take care.